Baird analyst Ben Callow thinks Nikola's stock price could reach $2. He issued a $2 price target for Nikola's stock. Now, that would be a 192% increase from where Nikola's stock price is trading at now. So, I'm going to look at Nikola's prospects. I'm going to look at the analyst's call and what he thinks is the catalyst that's going to boost Nikola's stock price higher. And then I'll give you my opinion on whether or not I agree with this analyst on if I think this growth stock has that kind of potential to reach $2 per share.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So here we have the analyst Ben Callow saying Nikola Corporation poised for growth in the zero emissions truck market. Ben Callow's rating is based on a confluence of optimism surrounding Nikola's niche in the zero emissions trucking market and belief in the company's leadership and proprietary technology. So the financial analyst anticipates Nikola to secure its financial footing through further market activities. That means more stock sales. The company does have permission from shareholders to issue up to 1.6 billion shares. It now has roughly 1 billion shares outstanding, so it can issue another 600 million shares. And at the current stock price, it can raise roughly another $500 million in cash. So, according to this analyst, the $2 price target is justified by a robust EV to EBITDA valuation metric reflecting a balance between the company's positive attributes and the risks involved with its execution strategy. Execution has been a big risk for Nikola. Right now, as we speak, Nikola's in the middle of a massive recall of its BEV trucks, its battery electric trucks. It has fuel cell trucks as well that it just started producing, but its battery electric trucks are in recall. According to management, they will start returning these recalled trucks to customers in the first quarter of 2024. And so that could be something that this analyst sees, that these returns are starting and they look like they fixed the problem. That could be a big factor in this valuation. But according to TipRanks, Callow is a 3-star analyst with an average return of 0.6%. Not a strong return rating for this analyst, and a 43.93% success rate. So less than 50% of this analyst's recommendations have been effective. So that's according to TipRanks. Although TipRanks data is known to be inaccurate. I know TipRanks has data on myself, and a lot of their ratings are inaccurate, or they'll record one recommendation but they won't record another one. Like if I recommend the stock as a buy in January, and then in, let's say, June, if I say that okay, it's time to take profits on this stock, I'll notice that it won't show up there that I recommended investors to take profits, and it'll still be acting as if I still have that stock rated as a buy. So TipRanks, not accurate. I wouldn't take any, at least not accurate with my personal ratings and recommendations. So I wouldn't be too influenced by their ratings on an analyst. So I wanted to highlight some of Nikola's production and delivery numbers. You could see here going back several quarters for its battery electric vehicles. In the second quarter of 2022, it produced 50 and shipped 48. And then it produced 75 and shipped 63 in the third quarter of 2022. And then in the fourth quarter of 2022, they faced a big problem. They produced 133, but they only shipped 20. They were thinking, look, we're shipping 48, 63, and this number is increasing, so we're getting demand for our trucks. Let's increase production even more. But this was the end of their growth in shipments, right? This was the peak. They never again reached 63 in a quarter. In fact, it dipped from 63 to 20, and that increased their inventory meaningfully from 133 to 20. That's a big increase in inventory. Those units had to be stored in their inventory, and that's cash that's being used up for inventory. And we all know that Nikola's hard pressed for cash. They're selling millions and hundreds and millions of shares of their stock because they're losing so much money on the bottom line. The cash to survive until they get to a point where they can be self-sustaining. And then in the first quarter of 2023, again, they produced 63 and shipped only 31. So inventory increased furthermore. Finally, in the second quarter of 2023, they reduced production enough where the shipments exceeded the production. 45 shipped, 33 produced, so they draw down inventory here by 12, but they had built up inventory by over 120 units already. And remember, these trucks are hundreds of thousands of dollars each individual truck. So you've got over 100 and something trucks at hundreds of thousands of dollars. That adds up. So now they're working through this inventory. Management said they've changed their production model. Instead of just producing these trucks and then trying to sell them, they're only going to produce trucks that already have a buyer. So they're made to order from now on because they don't want this inventory problem anymore. They realize what a big cash problem it is. And on top of that, you've got to pay for the storage, right? These are big, heavy duty trucks. They take up a lot of space. So not only are you spending the cash for the actual truck, but then you're spending the cash for storage and security, right? You can't just leave these trucks alone somewhere. They've got to be watched, and you got to maintain them. You got to protect them. You got to make sure they're okay and not like rotting away under the sun or under extreme weather. So it's not a good sign to have this inventory buildup. Thankfully, I think management made a prudent decision to change their production model and go to a made-to-order model instead of producing trucks that don't have a buyer yet. Finally, I wanted to look at Nikola's valuation according to the price-to-sales ratio. The price-to-sales ratio measures what you are getting for the price you are paying in terms of sales. So what are you getting for every dollar in sales that you're paying? For example, in this first example, the market capitalization is $1.25 billion, and the sales for the previous 12 months were $185 million. That means you're paying a price to sales of 6.76. Similarly, if you look at the expected next year revenue, you would be paying $1.25 billion for $465 million in revenue expected, and that would mean the forward price to sales ratio is 2.69. The factors that influence the price to sales ratio include profitability. Of course, you would be willing to pay a higher price for a company that generates higher profits. That means $100 in sales will turn into $20 in net income for a company that has a 20% net profit margin. That same $100 in sales will only turn into $5 in net income for a company that has a 5% net profit margin. So companies with higher net profit margins tend to sell for higher price to sales ratios, all else being equal. Another thing that influences the price to sales ratio are growth rate expectations. All else being equal, companies that are expected to grow at a faster rate sell for higher price to sales ratios. Similarly, higher total addressable market opportunities tend to result in higher price to sales ratio because investors see this company being able to grow for a longer period of time before hitting the ceiling. And finally, cyclicality. Companies that are more stable and less cyclical tend to sell for a higher price to sales ratio because cyclical companies are seen as being more risky. Companies like McDonald's are seen as being non-cyclical. McDonald's does relatively well whether the economy is booming or whether the economy is in recession. And so investors would be willing to pay higher price to sales ratios for companies that are less cyclical. Investors use the price to sales ratio when a company has negative earnings, unstable earnings that fluctuate between positive and negative, and also the same for cash flow. If a company has negative cash flow or cash flow that's fluctuating from positive to negative, the price to free cash flow and price to earnings ratio are less informative, so analysts use the price to sales ratio. Okay, so now you have an idea of how price to sales ratio is a determinant of value and not just price, right? We can see Nikola's market price, but now we know what the price to sales ratio is. And according to that metric, the stock is the cheapest it's been all year long at a forward price to sales of 1.2. So I can see why this analyst is starting to turn bullish on Nikola's stock, although I will say that I disagree with his estimate that the stock price could rise to $2 per share. I think that's too optimistic for Nikola's share price, especially considering its history of not executing well. I wouldn't be as bullish as this analyst is, although I'm not taking anything away from this analyst. This analyst certainly has reasons for making this prediction, and I wanted to highlight some of the prospects and some of the reasons why I think and why I disagree with this price target. My price target would be significantly lower than $2 for Nikola's stock. In fact, I have a couple of videos that answer where I think Nikola's stock price will be in 2024 and where I think Nikola's stock price will be in 2025. So I'll link to those two videos at the end of this one. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.